Hi, how's it going? This is episode 3 of the beginner trading education series. Today I'll be going over bases slash patterns with roadblocks as an example. This is a trade I took in May off of a pretty simple and perfect cup and handle pattern. So I thought it would be a great example to use because, I took the trade and it's very simple. So, as we can see here, I have my little notepad. What is a base, right? So we're going to be going over just every aspect of a base, pivot, and what's good about a base, what's bad about a base. So let's get into it. So my definition of a base, I'm sure people have different definitions, of course, is a consolidation, a price consolidation, while in an uptrend that is the price consolidation, that is at least 5 weeks in duration and doesn't exceed a depth of 40%. So, for example, here we have roadblocks. If I get the handy dandy ruler and I draw from the high to the low, we have a 34% depth, which isn't too bad. And then if I were to pull it all the way over here, it's 101 days, which is longer than 5 weeks, which would be the minimum length. So, to put simply, a base is just a pause in price movement where the market kind of builds energy before it really launches upwards. Um, just needs time to calm down, filter out the weaker buyers or holders of the stock before it makes its real launch pad move. So now let's get into what is a pivot. A pivot is a little hard to define precisely. I couldn't figure out a perfect way to define it precisely, but quite frankly, it's not very nuanced. And as visual creatures, you'll learn what a pivot is very quickly without needing to exactly define it. But to put simply, it's either the highs of a base or the highs of a handle. It's just where 80% of the price action of a consolidation is under, you know? So if price has been going sideways for 4 months and you can draw a line across the top and 80% of, all the days or 90% of all the days are below that point, um that's the pivot. It doesn't have to be super nuanced. Um excuse me, sorry. So if I, for Roblox, I simply drew a box, do a box or a line from the high to the handle high. And I decided that that was my pivot. You can do a line, you can do a box. It really doesn't have to be super nuanced. Just once it moves through this point that it has been held under the majority of the time, that is when you buy, right? So this is your indicator, if you will, of when to buy. Is, oh, price has moved through this point, right? So if I were to play 1 day on the Roblox, you can see price moved through the pivot, through the buy point, right? So at this point is when you'd buy according to a base breakout strategy or a pivot breakout strategy. So let's go on. What types of patterns are there? Well, there's cup and handle, which is on the screen. There's high type flag, which I'm sure you've heard of, also known as power play. And there's many, many others. My point is here, there is probably 100 patterns you could learn, and it doesn't value you to learn the pattern. What values you is to learn, or benefits you is to learn the characteristics of a good pattern, right? So a cup and handle is a pretty common one, and it's a good one because generally it carries the characteristics of a good pattern. I'll expand on that further in a second here, but To identify patterns, I like to do a simple exercise where I draw along the outside. So I just outline the price consolidation. So here, if I were to draw alongside the price consolidation, I'm just outlining it, right? As you can see, it looks like a cup with a handle. So that's a good way for beginners to identify patterns, is just outline it, and soon your brain will get better at the pattern recognition. But so moving on, what is a good base and what is a bad base, right? Because there's lots of base. There's bases that are super sloppy and are gonna fail most of the time, and then there's bases that are gonna work most of the time and provide huge returns on small risk. A base where you could catch like a 4% stop loss and then the stock moves 50%, versus a base where you got to put a 10% stop loss. Obviously, you're going to want to take the clean base. So what is a good base? You want low depth, like we were saying. The lower the depth, the better, as in the lower the number, the percentage number. So if you have a 10% pullback, if your stock moves up 100% in an uptrend and its consolidation is it coming back 10%, it shows huge resilience, right? So that's very positive. But you also don't discredit something like Roblox where it pulled back 33%, but it still provided a very clean setup. So I like to say just 8% at the least and 40% at the most. Anything under 8%, you're probably trading it would have to be a very low volatility stock that, barely moves, and it's not the type of thing that you're going to make good, fast money on. So that's point one. And point two is going to be you want the depth of each contraction in the base to be decreasing as price approaches the pivot or the highs of the base. And what I mean with the depth of each contraction decreasing is there's always a right side of the base, right? So if I were to go back to here, it isn't a base yet. This is you could say it's a consolidation, but it's not a base. But then if I go forward, right? If I move this thing forward. Here we go. So if I go forward, right? The base has been formed. And as it moved up this right side, price action wasn't wish-washing around. It was getting tighter and tighter and tighter, right? So it comes down, poof, hard smack down, poof, poof, poof. It's all over the place. As it moves up, it is steady. This is its drop. Barely anything. Steady advance. This is its drop. Barely anything. Steady. So that is the type of thing you want to look for in terms of depth decreasing along the right side of the base. As it approaches those highs, if volatility is decreasing, it shows that demand is being vacuumed and that supply is being vacuumed and the demand is increasing or staying the same, because there's no volatility, there's no supply to wish-wash it around. And as depth decreases as well, you're going to want to see low volume. So, for example, below the pivot, we have this handle, right? You always want a handle below your pivot point. That's another essential, is having a handle below the pivot, but I'll get into that in later videos. So in the handle, down here, you can see the volume. There was 2 days where the volume was super low, and then boom, the volume starts lifting up, and you get this really strong volume contrast where on this day it was 5 million shares, and then here it's 10 million shares. So supply and then demand increased and price advanced rapidly and with strength. Here, I'll play the chart as I explain this next point. So a bad base is simply the opposite of what I've mentioned, right? A wide and loose, price consolidation where it swings down maybe 50% and then it swings up and it gets wider and looser. It never quite tightens up and volatility decreases to where you can actually get an actionable point, right? And also volume is high while it's wide and loose within the base. So that's what I'd define as a bad base, the type of base you'd want to stay away from. I'll actually show you on Roblox, it'll be coming up here in a second, what a bad base looks like. So after this advance, it had made this crazy day where it gapped up. It was its largest percentage move for this whole advance, and it had its largest volume day. If you think about a marathon sprinter, when they approach the finish line, they are sweating, running out of breath, but running as hard as they can because they know they're close to the finish line. That is kind of what happens here, is when you have the largest percentage increase day, the largest volume, and a gap up, after it's already made a huge move, it's like its final sprint. It's like the last stand. Odds are very high that it's going to need to take a breather after doing this crazy sprint, right? It's just finished the marathon. It's just, crossed the finish line. It's going to collapse, it's going to sit, and it's going to need a minute. Odds are, in this instance, earnings couldn't keep up, so it had to take a break. But so I'll play on and you'll see a poor base develop, a very wide and loose base that can't quite tighten up and develop some serious constructive price action. So you can see it gaps down, it gaps up. It comes above this kind of resistance point. It can't make any real advancement. It gaps down again. It just gets wide and loose when it's supposed to get tight and constructive. And what happens is the base failed and they didn't come in on earnings and they have been getting smoked. But so that is my overview of what is a base, using Roblox as an example, going over what you should look for and what you should avoid when trading bases, and also going over what is a pivot. Thanks for watching. I hope you enjoyed. If you found value, please like and subscribe.